On the last trading day, October 15th, Nvidia stock pulled back down, and so many of our subscribers are asking us, is it time to sell or is it a good buying opportunity? Well, we will answer this question based on data on how wealthy investors are trading, bullish or bearish, because on the last trading day, we found two unusual trades on Nvidia stock options, each worth more than $100 million. And so in this video, we will explain our two reasons based on two data sets as to why we are going long bullish on Nvidia stock and see this pullback as a good buying opportunity. And so without further ado, let's dive into the data as usual. As we can see here on the options time and sales tape, 163,000 contracts and 124,000 contracts were being traded at the same time on October 15 at 11:15 at the 55-second mark. These are the December 20 options at the 125 strike calls and the 110 strike calls. We also see another trade here for 90,640 contracts being traded on October 15 at 2:38 at the 42-second mark. And so these are for the November 15 options at the 119 strike calls and the December 20 options at the 130 strike calls. And so let's take a deeper look at this trade first to find out what this wealthy investor is doing with these 90,640 contracts. So the first thing we need to make sure of is which of these trades between these two are the new opening trades as opposed to closing trades, because we only want to follow the new data that is an opening trade. So by looking at the historical data before these trades were made on October 14th, we can see that for the November 15 options at the 119 strike calls, we had an open interest of 93,000 contracts. And so if these were opening trades, then the open interest should have increased. And so if we look at the new data now, for these November 15 options at the 119 strike calls, we can see here that the open interest is 17,000 contracts now, which actually decreased. So we now know that these were not opening trades, that they were closing trades, which is why the open interest has decreased. So for the other option in December 20, we can see that for the 130 strike calls, we have an open interest of 43,000. And so if these were the opening trades, then the new data today should show an increase. And so let's take a look for these December 20 options at the 130 strike calls. And so as we scroll down, we can see all the way at the 130 strike calls, we now have an open interest of 124,000 contracts now. So these December 20 options at the 130 strike calls are the opening trades. And so when we take a look now at this trade, we now know that the November 15 options are the closing trades, and these December 20 options are at the 130 strike calls are the opening trades. And so we can calculate the trade costs now. They paid $13.40 for each of these options. We need to multiply by 100 since each option represents 100 shares of stock. And so each of these call options cost $1,340. And since there was a total of 90 1,640 contracts being traded. We multiply that out and we get a total trade that costs $121 million. But keep in mind, Nvidia stock is a $1 trillion company. So $121 million is only a drop in the bucket. And so this is a higher risk trade in comparison to the trades that we share on our website. So if you want better trade ideas based on stronger data that have a higher probability of profit, then make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas that have a higher chance of profit in comparison to this one here. Now, when we analyze these call options at the 130 strike calls, we can see based on our analysis, they were buying these call options to open for 1340 as we had just saw on the options time and sales tape. And so when we analyze this trade on the risk profile, we can see here where the share price of Nvidia is represented on the x-axis and the profit loss is on the y-axis. Note the zero break even. So anything below that is a negative loss. And you can see that as the share price goes up from where it currently is at $132, it becomes more positive profitable because this is a long bullish trade where this wealthy investor is going long bullish. And you can confirm it here with the positive delta trade. If it was a bearish short position, it would be a negative delta. And so this is our first reason why we think this pullback is a good buying opportunity. Now let's take a look at the second data set for the 163,000 contracts and 124,000 contracts for the December 20 options at the 125 strike calls and the 110 strike calls. Again, let's find out which one is the new opening trade as opposed to closing trades. And so when we take a look at the historical data, before these options were being traded for December 20 at the 110 strike calls, we can see here that the open interest was 232,000 contracts. And when we take a look at the new data now for these December 20 options at the 110 strike calls, let's see if it is increased or decreased. We can see here at the 110 strike calls, the open interest has decreased to 89,000. So they were not opening new trades. And so when we take a look at the second option at the 125 strike calls, we can see here that the open interest is 46,000. And when we take a look at the new data at the 125 strike calls, we can see now that it has increased to 205,000. So these are the new opening trades. And so now we can calculate the total trade cost now that we know that the 110 strike calls were closing trades and these options were the new trades where they paid $16.65. We need to multiply by 100 since each option represents 100 shares of stock. And so each call option cost $1,665. And since there was a total of 163,000 contracts being opened, we multiply that out and we get a total trade that costs $271 million. Which is twice as more as the other unusual option we had just analyzed. And based on our analysis of these options at the 125 strike calls, they were buying these 125 strike calls to open for $16.65 as we had just calculated. And when we analyze this trade, you can see on the risk profile that this is also a long bullish trade. As the share price goes up, these options become more profitable. If it goes down, it becomes more negative. And we can confirm it is a long bullish trade because we also have a positive delta. And so this is our second reason why we are going long bullish on Nvidia stock and see this pullback as a good buying opportunity, because both of these wealthy investors are trading more than $100 million staying long bullish on Nvidia stock as it pulls back. But as we mentioned, these unusual trades are higher risk in comparison to the trades that we share on our website, where we analyze stronger data sets to find out which trades wealthy investors are trading that have a higher probability of profit. So if you are interested in gaining access to those better trade ideas, then make sure to go to our website. We'll put a link over here. Let us know in the comments below. Do you think this Nvidia stock pullback is a good buying opportunity, or do you think it is time to sell? As usual, please smash the like button, subscribe if you haven't, take care, and have a wonderful day.